Good morning. Michael Kinslick here, head of the standard setting organization at SASB. I'm here with Anton Grodniuk to talk about the financial sector in the next in our series of sector webinars. We're going to go over SASB's approach to standard setting, and then Anton's going to dig in a bit into the financial sector, talk about the provisional standards, some of the changes that we're looking at in the financial sector standards, and next steps in SASB's development process. I'd like to encourage you to think about questions now, and you can submit them anytime. So the first point I want to make about SASB's standards development process is that we look to the SEC's definition of materiality as our guiding star. And just as a brief reminder, that would be, we think of something as material if the exclusion of that information would alter the total mix of information that an investor might consider in a decision-making process around security. Our standard setting process starts with looking at evidence. It is industry specific and market informed. So we're looking at evidence of financial impact or interest from investors on various topics. And in order for something to pass our initial materiality determination, it has to be relevant across the entire industry, be something that companies can reasonably be expected to manage and take action on, reflect broad stakeholder and investor consensus, and also, most importantly, have the potential to impact value creation in a variety of ways, and we'll look at those in a minute. We then filter these things and arrive at our standards that are meant to be material, decision useful to investors, and cost effective for issuers to prepare. And once again, these are designed for integration into the mandatory filings for corporations, the 10Ks, the 20Fs, the 40Fs. We want investors to have access to this information with the same regularity and assurance that they would expect from the financial information that they look to those filings now for. So really briefly, walking through our standards development process, the initial and Anton will look at these for financials in a little bit, but initially we look broadly at evidence of interest or an initial hypothesis for potential issues of interest in the given industry. We filter those looking for evidence of financial impact, either actual financial impact from those issues or prospective financial impact. We've characterized the nature of that. Is it something that would affect revenue generation? Is it something that would affect the cost structure of a corporation, its cost of capital, its assets and liabilities? And then we, in our initial set of provisional standard setting, we vetted those issues through our industry working groups and a public comment period to ensure broad consensus that these were the most material issues for companies in those industries. We found actually that companies by and large are reporting on these things in their 10Ks, and we'll look a little bit further at the state of disclosure on that reporting. And then as we look further to test the reasonableness of materiality, we're looking at looking deeply at modeling the financial impact from these issues via discounted cash flow models and other potential tests for materiality. So if we look at some examples of what these things might be and the levers of impact, we think about in the financial sector here, for an asset manager, integration of ESG factors might be a driver of revenue going forward as investors look to products that incorporate these things and invest their values. We might think of commercial banks that are facing more regulatory scrutiny now than they would have before the financial crisis, and now they need to really consider their compliance costs and the management of the regulatory environment as part of their ongoing business practices in a way they might not have 10 years ago. We see increasing demands for responsible lending practices amongst community banks and others to ensure access to capital, and this could affect license to operate for financial institutions and maybe affect their cost of capital going forward to the extent that they comply or don't with those kinds of demands. And finally, we see in investment banks and others exposure to securities such as, let's say, coal mining stocks and bonds that might have significant valuation risk given the regulatory environment around the environmental exposures of those organizations. So these are things that affect companies in the financial sector broadly. There's no single specific type of exposure or lever of transmission to financial value, and that's kind of the point we want to make here, that these are broad topics that organizations need to think about creatively to ensure that they're managing themselves for ongoing success. Now I'm going to hand it over to Anton for a little deeper dive into the financial sector specifically.
Thank you, Michael. Hello, everybody. So I'll give you a quick overview of the sector, its industries, and topics. So financial sector in the SASB classification system includes 7 industries: commercial investment banks, consumer mortgage finance, insurance, asset management, and security and commodity exchanges. If you think of 2 main sustainability trends that impact companies in these industries, you can probably think of the 2 most distinct ones. As you know, companies in the financial sector are very heavily regulated, and therefore one of these trends relates to management of the legal and regulatory environment. And what specifically it pertains to is the managing of internal controls around anti-money laundering, corruption and bribery, market manipulation, antitrust, and insider trading. And the second trend pertains more to evolution of environmental and social factors, as well as the changing customer demand. And this topic is integration of ESG factors in key business activities. What it means is that for asset management and insurance, for example, integration implies taking into account ESG risk and opportunities in investment management. For investment banks, in advisory and underwriting, and for commercial banks, it means integration of ESG factors and credit risk analysis of borrowers. So if you, in the next slide, you see the high-level overview of all the sustainability topics that we included in the provisional standards for the financial sector. As I mentioned, some of the topics in the leadership and governance capital, for example, cut across, including the one I mentioned, as well as systemic risk management. Same goes for the business model and innovation type of issues around integration of ESG factors. But in general, each and every industry has a unique set of sustainability topics because risks that companies in these industries face differ. And this is one of the main advantages of SASB, its industry-specific approach. As Michael briefly mentioned, we rigorously doing this disclosure analysis to understand what companies are currently reporting in their SEC filings. And we do so using up to top 10 companies in each industry. As you may notice here, the financial sector, the third bar from the top, actually has the most metrics reported by companies. And what that may relate to is to the fact that a lot of metrics that SASB actually includes in the standard may be more traditional financial metrics, because the topics that relate to companies in this sector are more finance-focused topics rather than traditional sustainability topics that you may think of in other sectors. And if you go to the next slide and look at the disclosure across industries in the financial sector, you will see that 70 to 80% of companies already report sustainability information in their SEC filings. And actually, the quality of disclosure is relatively consistent across these industries. But SASB's goal is to move this needle from this red boilerplate and no disclosure to the dark gray comparable metric reporting. Interestingly, though, the quality of disclosure varies when you look at the different across the topics. So, for example, in the investment banking and brokerage industry, some of the topics have significantly better disclosure, and those are the topics that are heavily regulated. On the other hand, topics like employee inclusion and integration of ESG factors may not be reported at that level yet. I think it's also important to mention here that while companies are reporting metrics, these metrics are still not standardized, so that prevents analysts to do a cross-company comparison on their performance. Therefore, SASB came to the market and developed its standards. So, as you know, SASB released its provisional standards for the financial sector in early 2014, and now we are developing hypotheses for change to codify the standard. So again, if we go back to this slide, you will see that the provisional standards has approximately 3 to 6 topics per industry. Some of them are cross-cutting topics. Some of them are more unique, industry-specific. But what is important to mention here is that the metrics that we include in each of those topics are unique, and they help analysts to measure performance on these sustainability issues. And so for the same, even if the topic is very similar, such as management of legal and regulatory environment, metrics that we include in each of those industries may vary. And to give you an example, if you look at the metrics that we use for the integration of ESG factors in key business activities, metrics are different, and they pertain to the activities that companies in each of those industries are involved in. So for commercial banks, we want to measure how companies integrate ESG factors when analyzing credit risk of their borrowers. For investment banking, it's more of the size of ESG products that relate to underwriting. For asset management, it's of course the integration of ESG factors in investment management. So it's also very important to say here that we're not making a statement that performance on each and every metric necessarily highlights the performance of the company. SASB presents a set of metrics to measure performance on each and every topic. So metrics should be used by companies and analysts as a set rather than individual metrics. So to give you a little overview of how we determine what topics are being included in the standards, and Michael gave you a little bit on that, but just here's an example from the commercial banks industry. As Michael mentioned, we look at the evidence of interest, and what heat map here highlights is that we use advanced algorithms and search through filings that are SEC filings, sustainability reports, news, legal filings, and try to identify the frequency at which companies report on those topics. But of course, this is not the only factors. You know, companies may report and talk about various sustainability topics. They may not, in fact, be material. Therefore, we also look at evidence of financial impact. We want to make sure that each and every topic leads to certain channels of financial impact and may alter financial performance of the company. At the same time, we also ask industry participants from companies and investors and other public interests about the importance of an issue. And as you can see here, a significant majority of participants in the industry working group agreed that these topics are in fact material to companies in these industries. So, as I mentioned before, SASB's goal is to move the needle from no disclosure and boilerplate disclosure to reporting standardized metrics to help analysts measure performance. And unfortunately, though, companies still disclose some of the topics that are basically pretty straightforward topics, such as data security, in very vague boilerplate statements that don't really help analysts to understand whether a company performs well or not. Some companies, though, already report some metrics, but analysts may wonder whether these metrics are actually comparable across, and whether some of these metrics are in fact the decision useful metrics that help companies measure performance on this topic. So for example, when a company discloses the amount of money spent on data security, the more you spend may not necessarily mean that your controls around data security are the most robust. So therefore, SASB looks into the metrics that may help analysts identify and measure performance in a more consistent way. And of course, we also put activity metrics that help analysts to normalize performance. So some companies already do report metrics that are very closely aligned with metrics included in the standards. For example, one of the insurance companies reports probable maximum loss, which is one of the metrics included in the environmental risk exposure. And this metric helps analysts to understand the level of exposure to extreme weather events and the loss that company may incur in the case of this event. Unfortunately, though, at this stage, there is not enough information available to analysts to make informed decision. But this slide, I guess, would show what the ideal world would look like if that information was available. So what it shows is that the type of analysis an analyst valuing insurance companies could perform when a combined ratio is one of the, and I'm not going to go into too much detail on that, is one of the ratios used in analyzing performance of insurance companies. And probable maximum loss is one of the metrics, as I mentioned, used in the SASB standard. So using this type of analysis, an analyst would be able to see the riskiness of individual companies looking forward in case events, extreme weather events were to occur. An analyst would be able to identify which company is better prepared to withstand the losses. So as Michael mentioned, we are right now looking into codification of the provision of standards. And I'll give you just a couple examples of what type of changes we're looking to bring into the provisional standards. So the range of changes varies in the financial sector. First example is an inclusion of a new topic. So SASB analysis after the provisional standards were released identified that companies in the investment banking industry may face regulatory scrutiny, and there have been some cases of companies being fined for failure to provide transparent information and fair advice to their clients, and it pertains mostly to their advisory services and underwriting services that investment banks provide. And therefore, there's been enough evidence to propose inclusion of this topic in the codified standard. And the second example is more of a technical type of a change that we propose, and it relates to a specific metric. So we are proposing to provide a broader breakdown into the employees categories to measure the employee inclusion metric in employee inclusion, performance on the employee inclusion topic in the asset management industry. And I would like to mention here that the categories that we use in this particular metric and in many other metrics are actually reference existing regulatory frameworks, which means that SASB is not inventing a lot of these things, and what it also allows is for companies to use their existing framework that they already used to measure the performance in reporting. So I'll turn it back to Michael, and he'll go into the next steps.
Thanks so much, Anton, for that information on the standards and issues in the financial sector. First, before I get into our upcoming codification cycle, I would love to encourage you to get your questions in. We see a couple already that we'll get to in a minute, but first we'll finish up with the rest of what we have for you. So we're looking at, we put out our rules of procedure that will govern our standard setting process for public comment earlier this year. The essential points that I want to make on this is that our board will be seating an independent standards council composed of 7 to 9 professionals focused on, with expertise in standard setting, accounting, financial reporting, corporate governance, and these sort of fields to oversee the standard setting process independently. That body will be responsible for final approval of the standards and will have ultimate authority over the standards process. We will also have, as part of our board, a standards oversight committee to handle any issues around due process of the standard setting procedures that anyone might want to bring to their attention. Our process right now is one of deep consultation with issuers, investors, third-party experts to test materiality, decision usefulness, and cost effectiveness of both the provisional standards and the proposed changes that, as Anton mentioned, we're going to be seeking additional comments on. We expect that process to proceed for the coming 2 quarters, at which point we will then put our proposed changes along with the provisional standards up for public comment as we proceed towards codification in the latter part of 2017. So right now we'd love to encourage all of you to participate in that consultation process and get us feedback on the standards and hypothesis for change. I want to also mention that SASB has wonderful partners that we work with to help support use and integration of the standards. You can see them there and reference them in the copy of the presentation you'll get later. And we also have a kind of a system of supporting products here within SASB, our recently launched Navigator, the technical bulletins, the materiality map that accompany the standards, our implementation and engagement guides for investors and issuers, our education programs via the FSA credential, as well as the 6 industry classification system that we use to identify companies and build the standards on top of. Finally, on December 1st in New York City, we'll be hosting our inaugural SASB Symposium. We've got a great lineup of speakers. You can see some of them there, and we would encourage you to attend. It's going to be a really wonderful session, and you can check online for more details on that. Once again, I want to open it up to questions, and thank you for your attendance so far. Okay, so it looks like we have one. I'll take this first one. Is there a requirement or standard that provides guidelines as to where to put these disclosures in the financial reports? So these are intended for inclusion in the MD&A section of the 10K. That is the place for sort of non-financial information, and also means that these standards and metrics don't necessarily need to pass through a full audit procedure, but can work through an attestation or assurance process, which is a little less daunting for organizations. Here's one for Anton. How would SASB's framework have provided early warnings about the recent Wells Fargo issue?
Oh, that's a great question. Yeah, so the credit and debit card business segment is captured in the consumer finance industry, and one of the topics that is included in the consumer finance industry is transparent information and fair advice, which captures the incentive compensation structure of retail bankers, as well as the policies around disclosure of products being sold to consumers. Therefore, if that information were to be reported by companies, analysts would be able to identify early red flags of some improper compensation structures. And actually, we're currently looking into some revisions to metrics in this topic to capture this angle better. And I would like to also reference you to a SASB blog that I recently wrote on the case, which will provide a little bit more information on that.
Great, Anton. Thanks so much. Next question. What is the timeline for codification? So I addressed that a little bit towards the end of the presentation. We don't have a firm date published yet. We hope to soon, but we are looking to codify the initial provisional standards and agenda for change into our initial SASB code sometime in the second half of 2017. Next question. What kinds of companies does that insurance category include? Anton?
Yeah, actually, that's really a good question. I think they're wondering about the differences in sustainability topics that may relate to different segments in the insurance. So the insurance industry in the financial sector actually includes property and casualty segment as well as life insurance. But the healthcare insurance segment is actually included in the healthcare sector standard, specifically in the managed care industry. So that's the way SASB addresses the insurance.
So got a question here. Are SASB standards incorporated into B-Lab's GIRS? I am not specifically familiar with the GIRS from B-Labs. I do know that a couple of SASB's professionals have been involved in recent B-Lab convenings, so I know we are engaged with that organization, but I don't have an answer to that specific question. Sorry for that. So another one, are there any other changes beyond those two that will be proposed for the financial sector?
Sure. So yeah, so SASB is constantly looking into changes in the sustainability environment and the new trends that may impact companies in a material way. And to give you an example, one of the topics that we also proposing for inclusion in a couple industries, specifically in commercial banks and consumer finance, is customer privacy. We see that companies in these industries are increasingly using personal customer information for marketing purposes through affiliates and non-affiliates, which raises concerns, further increases concerns around data security, but at the same time also concerns around data privacy. So we are proposing inclusion of this topic.
Yeah, and we'll be publishing the formal agenda for change for public comment at the end of this consultation process, so everyone will have the opportunity to see those and comment on those before we proceed to codification. Another question, first I guess for Anton, how do you look at compensation in the financial sector as a material topic?
Great question. So we have a topic that is called employee compensation and risk-taking that gets into the compensation structure of employees that specifically may be involved in decisions that may materially impact risk of a company. So SASB has a very focused approach to this topic, and we're not including compensation of, for example, other frameworks may be looking at the board compensation or compensation across companies of the C-suite. SASB's approach to this issue is more industry specific. We are identifying industries and where compensation may specifically result in other social and environmental impacts. So in investment banking, for example, compensation risk-taking of compensation structure of traders and other professionals may impact the risk position of in the company's portfolio. So we include metrics that focuses on specific employees.
Great, and we have a final question looking or asking about how companies have responded to the standards and metrics, and are they moving towards adoption in the MD&A. And what we're actively engaged in conversations with leading companies, and what they are mostly telling us is they are actively looking at the standards and metrics and engaging with us on giving feedback on them, but we don't expect them to start reporting on the MD&A until we've actually codified the initial standards. So they tend to be sort of moving towards that, but waiting for the final codification. And with that, we're going to end the this edition of the SASB Sector webinars. This has been the Financials Sector with Anton Grodniuk and Michael Kinslick of SASB. Thanks very much for your attendance, and look forward to your continued engagement.